So we're going to see a company manufactures product A and product B during the year ending 31st December 2015. It is expected to sell 15,000 kg of product A and 75,000 kg of product B at rupees 30 and rupees 16 per kg respectively. The direct materials P, Q, R are mixed in the ratio of proportion of 3:5:2. The direct material means input. They are mixed in the ratio of 3:5:2 in the product output A. Material Q and R are mixed in the ratio of 1:2 in product B. The actual and budgeted inventory for the year given below. Opening stock, closing stock, anticipated cost per kg. Metal P input 4000 kg, 3000 kg, 12 per kg. Metal Q input 3000 kg, 6000 kg, rupees 10 per kg. Metal R input 30,000 kg, 9000 kg, rupees 8 per kg. Product A output 3000 kg, 1500 kg. Product B output 4000 kg, 4500 kg. You have to prepare production budget and material budget showing the expenditure on purchase of material for the year ending 31st December 2015. Right. First we have to prepare production budget. Production budget. So we have to prepare production budget for A and B, for A and B products. This is purely finished goods, or we used to call output, or we used to call it as output. Finished goods or output, right? First, sales units. So particular product A, product B. First, sales units. Sales unit 15,000 units. Here 75,000 units. At closing stock units. So closing stock units 1500. Here is going to be 4500. Less opening stock units. 3000 units finished goods. Here 4000 units finished goods. So sales finished goods plus closing stock finished goods minus opening stock finished goods. Answer: material production consumed for production. Material production produced. Fine. So production units equal to 15,000 plus 1500 minus 3000 is going to be 13,500 units. A we produced. B 75,000 plus 4,500 minus 4,000. 75,500 units we produced. Right. From the production we have to find raw material purchased budget. Next, raw material purchased budget. Raw material purchased budget for December 31st 2015. Right. So particular raw material P. Raw material means input. So purely input budget. Raw material input. So raw material P, Q, R, total. First, material consumed, right. Now, total unit material consumed 13,500 kg of A. 13,500 units of A we consumed, a kg consumed. This is to be apportioned in the ratio of 3:5:2. 3:5:2. That is 13,500 into 3/10, 2/10, 1/10, 1/10. So 13,500 into 3/10 become 4,050 kg. 6,750 kg. This is in terms of kgs. kg. 6,750 kg. 2,700 kg. Total kg. This is metal consumed for A. Similarly, metal consumed for B. Material consumed for B. That is in the ratio 1:2. Metal consumed for B is equivalent to total kg 75,500 kg we consumed out of production. This is to be apportioned between Q and R. There is no metal P in metal Product B, only Q and R. So 75,500 into 1 by 3, 75,500 into 2 by 3, into 2 by 3, into 2 by 3. So metal consumed here going to be dash, here 25167, here is going to be 50,333, right. This is material consumed for A and B, PQR. So add closing stock of raw material for PQR is going to be 3,000, 6,000, 3,000, 6,000, closing stock of P, closing stock of Q 6,000, closing stock of R 9,000, less opening stock of raw material PQR 4,000 opening stock less 3,000 opening stock less 30,000 opening stock less 30,000 opening stock less. So opening stock 30,000 opening stock less. So answer purchase of raw material answer purchase of raw material. So metal consumed plus closing stock minus opening stock, answer raw material consumed. Purchase of raw material is equivalent to 3050 units, 3050 units or in terms of kg, 3050 kg, here 34917 kg, 34917 kg, here 32050 kg, 34917 kg, 32033. Now purchase cost rupees, that is 3050 into 12, 3050 into 12, that is equivalent to 36,600. Here 34917 into 10 is going to be 349,170 rupees. Next one 32033 into 8, rupees 256,264 total purchase cost. So total purchase cost is equivalent to 36,600 plus 349,170 plus 256,264 rupees 642,034. Next question. For production of 10,000 units, the following are budget expenses. Direct material rupees 48 per unit, direct labor rupees 24 per unit, variable overheads rupees 20 per unit, fixed overhead 1,20,000 12 per unit, variable expenses direct rupees 4 per unit, selling expenses 10% fixed rupees 12 per unit, administration expenses 40,000 fixed rupees 4 per unit, distribution expenses 20% fixed rupees 4 per unit, total 128. So prepare a budget for production of 7,000 units and 9,000 units. So we have to prepare flexible budget. So flexible budget. So particular given information for 10,000 units. So you have to prepare budget for 7,000 units and 9,000 units. First A, variable cost. Right, this 10,000 units we can divide into cost per unit and total. Here also cost per unit and total. Here also cost per unit and total. So variable cost number 1, direct material. So direct material purely variable, 48 per unit, everything in terms of rupees, 48 per unit, 48 per unit, 48 per unit, rupees, 48 per unit. So 10,000 48, 4,80,000. Here cost per unit 48, 7,000 to 48, 3,36,000. Here 48, 4,32,000. Next, number 2, direct labor. So direct labor 24 per unit. So 2,40,000. 24 per unit. 1,68,000. 24 per unit. 2,16,000. Direct labor. Variable expenses 4 per unit. 10,000 to 4, 40,000. 4 per unit. 7,000 to 4, 28,000. 4 per unit. So 36,000. 9,000 to 4, 36,000. Variable expenses. Right. Now fixed overhead given. Later on we will start for fixed overhead. Only variable only we have to take. Next, variable expenses direct. Variable expenses also given, that is equivalent to 20. Variable expenses, one more will be expenses given, that is equivalent to 20. So 10,000 into 20, 2 lakhs. 7,000 into 20, 1,40,000. 9,000 into 20, 1,80,000. That two variable expenses. Next, selling expenses. Selling expenses are 90% variable. 10% fixed, 90% variable. So here 12 rupees. So 12 into 90%, that is equivalent to 10.8. So 10,000 to 10.8, 1,08,000. Here also 10.8, here also 10.8, 7,000 to 10.8, 75,600. Here also 10.8, 97,200. So 1,08,000, 75,600, 97,200 selling expenses. Next one, selling expenses. Next one, admin expense purely fixed. Distribution expenses. 20% fixed, 80% variable. 80% variable. So 4 into 80%, that is equivalent to 3.2. 10,000 to 3.2, 32,000. Here also 3.2. So 22,400. 3.2. Here also 3.2. 28,800. So these are the variable expenses. If you just add these variable expenses, you will be getting a variable cost. So total variable cost you will be getting. Here 110, here 11 lakhs, here 110, here 7,70,000, here 110, here 110, 9,90,000, total variable cost. Right. Next, fixed cost. Here, fixed cost. Number 1, fixed overhead is given. That is equivalent to 12 per unit. So 10,000 to 12, 1,20,000. So fixed cost per unit is given, total fixed cost given. Total fixed cost remains same in irrespective of output. So therefore 1,20,000. It is always 1,20,000. Always 1,20,000. 1,20,000. 1,20,000. 1,20,000. Right. Next one. Selling expenses. Selling expenses. Selling expenses. Selling expenses. 10% are fixed. 10% are fixed. That is 12 into 10%. That is equivalent to 1.2. 1.2. 10,000, 1.2, 12,000. Fixed cost remains same for all the total fixed cost remains same for all output. All output. Therefore, 12,000, 12,000, 12,000. So total fixed cost remains same 10%. 10% selling expenses fixed. So 10% selling expenses are fixed. Fixed. Next, administration expenses. Admin expenses. So admin expenses that is equivalent to, that is also purely fixed, 100% fixed. Admin expenses purely fixed, 4 rupees. So 10,000 into 4, 40,000. Irrespective of total fixed cost remains same. So 40,000, 40,000, 40,000 admin expenses. Next one, distribution expenses. Distribution expenses. So 80% variable, 20% fixed. So 20% fixed, 20% fixed. So 4 into 20%, 4 into 20%, that is equivalent to 0.8, 0.8, that is fixed, fixed. So 8,000, 8,000, so 8,000, 8,000. That's it. We have to make total now, total now. So total fixed cost. So total fixed cost, total fixed cost, total fixed cost 18, 18. Here 1,80,000, 1,80,000, 1,80,000, 1,80,000. Fixed cost remains always same irrespective of output. This is total fixed cost. Alright. Now total cost. So total cost, that is equivalent to variable plus fixed. Variable plus fixed. So 110 plus 18, 120. 11 lakh plus 1 lakh 80. So already we have 11 lakh plus 1 lakh 80. So 12 lakh 80,000. 12 lakh 80,000. 7 lakh 70 plus 1 lakh 80. 9 lakh 50,000. 9 lakh 90 plus 1 lakh 80. 1 lakh 80. So 11 lakh 70,000. 11 lakh 70,000. 11 lakh 70. This is total cost. Total cost. That's it.